Dr. Stoxx. Hey, it's Sunday night, the 9th of August, and I just was doing my market prep for tomorrow's market and updating our various newsletters. And I just wanted to share some of what I'm looking at in terms of research with you, some market research, and also go through a list of stocks that might be of interest for you in terms of trading this coming week. Now, some of those may end up in one or more of our letters, and therefore only for subscribers, but I just wanted to point out some of the things that showed up on my watch list this week. But first, let's take a quick look at the S&P 500, represented here by the SPDR ETF. And I just wanted to point out that, I've been getting a lot of emails from my subscribers with some concerns about the market going forward. Is this the end of the bull run? Are we about to crash? Should we get into shorts at this point? And I would have to say that no, don't panic here. The market is setting up here, as far as I can tell, to make a new high very soon, and that may come in the next few weeks. It may come toward the end of the year, but I'm almost certain that we will be seeing new highs for the market sometime before 2016. And what gives me that impression is that the market has been making this very consistent pattern of pushing higher and then consolidating into a kind of wedge pattern or symmetrical triangle pattern, pushing higher out of that wedge pattern or triangle pattern, pushing higher, wedge pattern. Now here's a case right here where the wedge broke to the downside as a kind of head fake or a bear trap. It took in a lot of folks who were selling at that point, and it didn't go down any further. It was a new trading range. It was developing a lower edge of a new trading range right there. And as you can see, we've coiled up into another symmetrical triangle. In fact, this one is even more symmetrical than the other three. And if past is prologue, and it usually is in the markets, then I suspect we're going to see another push to the upside very soon. Again, it's going to be choppy and yucky and messy, the way we've been seeing the trading in the past 6 months here. I don't expect anything extraordinary on to the upside, but I do expect an upside breakout. I do expect new highs in all three of the major indexes going forward sometime between now and 2016. So this is not a time, in my opinion, to be getting short. There will come a time to get short, and I suspect that it would probably be somewhere around the time of the elections next year. I think we'll continue to see a fair bid under the market until then. But I do think we are setting up here at some point in the next year and a half for a pretty sharp downturn, but I'll let you know when that happens. I've got plenty of proprietary signals in place that trigger. I have a 93% accuracy on my bear signal, my bear market signal, and I'll let everyone know when that happens. So FinViz is the site that I use to search for stocks, and I ran what I call my Leaderboard stock scan, which mimics what the Investors Business Daily does when they set up their leaderboard of stocks. This highlights growing stocks that have lots of institutional support and are seeing a lot of new money coming in, et cetera, et cetera. I won't give away all the parameters. You can see some of them here on your screen. But as I ran that scan this weekend, I came up with 17 stocks. And you can see where, this is the list of the leading stocks in the stock market trading right now. Some of the strongest stocks in terms of growth, money flow, cash flow, institutional support, new money coming in, et cetera, et cetera. And if these stocks look great, then in my opinion, the market is looking pretty good still. And most of the stocks on this list are looking pretty great. I mean, look at this one. This is AmTrust. It's a financial services company, insurance company. It has a dividend of about 1.5%, and it's in a nice clean uptrend with a little pullback here. Here's Ambarella, which is the semiconductor company that whose components go into things like the GoPro cameras, and it's been a great momentum stock to trade the last few months. It's making also a nice little pullback off a double top. Really like this chart here. This is BoFi Holding, which is a savings loan, a bank company. Also, a great looking chart here, making a little a bull flag in progress. That would be a nice little 8 to 10 point trade going forward, in my opinion. Expedia had a great set of earnings. It's now pulling back a little bit off that ramp. I would wait for it to pull back a little bit, but you can see. Sorry, I didn't get that screened properly. You can see that Expedia is in a strong uptrend. Now, this is the kind of chart that I would find a little bit problematic if I ran my leaderboard scan and all the stocks on the list looked like this one, FleetCor, which is a business services company. The chart here is just too flat, too much of a trading range to give me the sense that stocks are in a healthy place right now. This stock is not necessarily in a healthy place. It's a great chart to trade, but if you can catch it down here at support around 150, or if you can short it at resistance up here 165, that's a great trading stock. But it's not giving me a sense that the market is healthy. But then I look at something like this, GII Apparel Group, which is a clothing company. It looks great. It's in a great uptrend. Globant, which is a IT company out of Luxembourg, it also is looking great. And so on and so on. And I just wanted to show you that according to the leaderboard scan, the market is healthy. The leaders are looking healthy. They're all in still strong uptrends. I do foresee some more bullish times ahead. Nothing to get too excited about, but you certainly don't want to get short the market just yet. I will let you know when to do that. As long as you're a subscriber, you'll know well ahead of time. All right. God bless everybody. Have a great weekend, and we'll see you Monday morning. Bye now.